Hello and welcome to this edition of Closing Trades right here on ET Now. Quick take as to how the last trading day of the week is going to pan out to be, and it's been largely range bound once again. Yes, there have been those jagged edges, but it's been a very narrow band that the Nifty has traded in. It's pretty much turning out to be an everyday story. That's of course not the case when you look at individual counters like a BSE, for instance. That's put up over 7% right now. Muthoot Finance, which is also scaling higher by 7%. NBCC, after its numbers, a solid 6% of a move coming in for that stock, or for that matter, Union Bank or a Glenmark from within the broader end of the market. But at an index level, you're largely having a negative breath at your hand with a count of about almost 155 standing to the declines. Within the large caps also, it's an SBI, HDFC Bank, L&T, though, you can find solace in the fact that it's the large caps, or rather the heavyweights, which are the ones which are taking the lead today on the index. Other than that, of course, there's Eternal also, which is higher by 3%. But metals, autos, that's where you're seeing a fair amount of weakness. Hindalco is down 2.5%, Tata Steel down 1.6%. Bajaj Auto has been a rank underperformer after its numbers, stock lower by about 2%. In fact, it's pretty much languishing at the session lows. And that's the case with JSW, Eicher, Tata Motors, Maruti, M&M. They're all the laggards in today's trading session. But let's take the conversation forward. We've got Kunal Bothra joining in to highlight what he's making of the market. Kunal, start of the new series, still very range bound. What's it telling you? How do you think the next month is going to be?
I think it's a good start for the index now, not just on the indices front. Of course, the Nifty is a lot more range bound, but I think the market breadth, so the same texture of the, of the market is, is where we are seeing the characteristics of the indices, where you're seeing, individual sectors trying to show signs of a breakout, very good volumes, cohesive price action. We were discussing about, a few of the sectors like defense, PSUs, metals, etc. I think today what you're seeing is the PSU banking pack and the mid cap and the financials, which are making a very strong comeback. There are a lot many stocks which are seeing extremely strong volume accumulation, and I think that's the a very positive sign. So with more sectors participating with the indices in the tight range to 5,300 odd points range for the index broadly, I think that's considered to be a very healthy sign. What we also need to see is that whether there is an open interest built up into sectors like, for example, PSU banking names, real estate, metals, etc. If we see that pattern, say, for the next 2 or 3 trading sessions consecutively, that could probably mean that we are not just looking at a momentum swing on the upside for these stocks, but more of a trending move which could last for at least another 3 to 4 weeks for this expiry.
So that's the take on the markets. But yes, indeed, like Kunal was highlighting, that it's the PSU banking space that has been doing very well. And in the last couple of hours, we are seeing stocks like Canara Bank, SBI, they are moving up higher. And add to that list is PNB as well as Indian Bank. So great moves on the banking space. And along with that, when we see heavyweight HDFC Bank too, that is also bucking up the trend, almost a 1% uptick in this counter as well. But Kunal, from the PSU banking space itself, any stock that you believe has more legs, the technical pattern is very much favorable? Because I think in this week itself, Kunal, we just touched upon Canara Bank. The day it was up around 2-3%.
Yeah, and yesterday I was flagging off Union Bank as one of the other PSU banking candidate as a recommendation. I believe, so frankly, Srishti, it's very difficult to pick and choose one of the best names over here, because the relative strength score, the RS score for many of the banking names, the PSU banking names specifically, runs neck to neck in terms of the relative price performance with respect to peers. For example, Bank of India, Canara Bank, and PNB. These are the top 3 names in the FNO side of the PSU banking list. Then you have the likes of Union Bank, Indian Bank, etc., which are also looking quite charged up. SBI somehow has been an underperformer on a relative basis. Yes, of course, the stock has done pretty well over the last 2-3 months. But then when we look at this in the extent of how there's been a 25 to 30% jump in many of the PSU banking names, SBI has been a little bit more on the moderate side. But then I think what we are looking out for as an overall signal is that this is a synchronized move for the PSU banking names. And you're looking at a fresh breakout for these stocks. And after 3 months or 6 months of a price correction for many of the PSU banking names, this is the first or the second month of a reprieve into these stocks. So I think I would probably expect that you are looking at the next 2-3 months of a very strong price uptick, which could continue for many of the PSU banking names.
Okay, PSU biggest banks, that seems to be the flavor. And today you've got Union Bank, which is one of the biggest buzzers, holding up a good 4% almost on the futures. And of course, is the big boy, which is SBI, which has also been sort of leading the pack as we speak right now. Bunch of other movers, and we've been talking about Manappuram as well as Muthoot. Look out for that, because the DFS has reviewed the draft directions on lending against gold collateral issued by the Reserve Bank, and they have given suggestions to the RBI now to ensure that the requirements of small gold loan borrowers are not adversely affected. Of course, this is one stock which is holding out very, very smartly. In fact, on last count, you've got Muthoot, which is scaling higher by almost about 7% or so. The other one, of course, has been BSE. SEBI's measures for boosting trading convenience, strengthening risk, monitoring in equity derivatives. That, of course, is the news flow around it. But both BSE and NSE and the kind of catch-up that their market value or market cap that they have been trading at has been moving has been nothing short of extraordinary. In fact, on the most awaited IPOs is already making waves, and NSE's valuation has surged more than 40% in the unlisted market in just 1 month, aided by comments from SEBI chief and NSE chief on the IPO progress. Anjali Palod is here with all the details on how high NSE is already soaring even before its listing. Anjali?
That's right. NSE's valuation has soared by nearly 45% in the month of May. So, if you look at the unlisted retail shares, according to sources for NSE, are priced at 2,350 as of today. And at the start of the month, this was around rupees 1,625. In terms of market cap, that means that NSE's market cap has surged from 4.02 lakh crore rupees at the start of the month to rupees 5.8 lakh crores now. This means that NSE now ranks as the 9th most valued company in India. And if we talk about the latest numbers that have come in from NSE in terms of their financial results, the profit for FY25 was rupees 7% year on year, and revenue was up 16% year on year. Now the volumes in cash market and equity futures for NSE surged by 40% also year on year. Now this surge in its market cap and share prices of course come from the recent buzz on its potential IPO, wherein NSE is awaiting an NOC from the markets regulator, and the SEBI chairman recently said that it will be done soon while talking about NSE IPO.
Right, okay, that's the word coming in right now on the NSE IPO and the kind of valuations it's subscribing. But SEBI Chairman Tuhin Kanta Pandey also said that the market regulator is very actively engaged in discussions with NSE regarding its long delayed IPO. In fact, he's saying that litigation issues still persist for the NSE IPO.
I think there has been some discussion on these points. As you rightly say, there were some points and they have replied. There are broadly 4 issues: one on governance, second on technology, third on clearing corporation, fourth is on litigation.
If they meet all 4, will they get a green light?
And settlement of the litigation. And these 4, I think with a very intent to resolve and with the intent to actually make IPO possible, we should work out a solution for that.
SEBI's views are, or SEBI's final decisions, we'll have to abide by.
You've already sent you a proposal to SEBI. So
we had already tried to shift our expiry to Monday. We were to go live in April first week, but we were told to keep it on hold because the new regulations were coming. And so once the new regulations come into play, we will have to do according to what SEBI wants.
will you send your comments again?
Once they have finalized their framework, we'll have to do that.
Okay, on IPO thing, it's under process. And of course, SEBI chairman said that the NSE officials and SEBI officials are under discussions and this could be materialized soon. So what's the update on that?
No, we have asked for no objection certificate. We being a highly regulated entity, we need to get, even before preparing our DRHP, we need to take the SEBI's approval. So that we have asked for. Once that approval comes, then we will be preparing our DRHP and then we'll file with SEBI as a company which is desirous of listing. So it's a longish process.
All right, so that was about NSE's valuation jump that we have already seen in the unlisted space rather, but in the listed space we have one of its peer, that is BSE, and not just taking cues from this, the other news flow for today stands wherein the SEBI has taken some measures for boosting the trading convenience, strengthening the risk monitoring in the equity derivatives as well. But Kunal, let's have a technical check on this one because it's been a one-way rally for BSE, especially in the past 2 months per se. But any indication that this chart is now getting into that overbought zone, or do you believe that the sky is the limit?
No, I think it's still not overbought, and I think that's a comfortable sign. In fact, 2 days back when we were discussing NSE start of or mid of this week, the RSI was 60 for NSE and rather for BSE. So that's a very, very moderate kind of an RSI, and that too at a point when the stock is already perched, post the special situation, already at its lifetime high levels. I think after adding today's gain, it's up 50% on a YTD basis so far, and that too over the last 3 or 4 years, the stock has done spectacularly well. So, it's a kind of a positive indication that the indicators are still not into an overbought territory. Even after today's move of 8-9%, the stock is still not into an overbought territory, which means that what one needs to do as a strategy is to just wait out for those phases of a mild correction, or the quietness into stock prices. Whenever the stock gets into a phase of a consolidation, that's actually a very good time to try and chip into this name.
Okay, we were just highlighting as to how the gold finances have been doing well, and the Department of Financial Services under Finance Ministry has shared suggestions with the RBI on central bank's draft directions on lending against gold collateral. The RBI, in fact, is reviewing the suggestions right now. Prakash Priyadarshy, my colleague, is here with more details on what exactly is in the build-up.
The Department of Financial Services and the Ministry of Finance has reviewed draft guidelines on gold loan issued by the, in fact, DFS has urged RBI to ensure that the small borrowers should not be affected by the new provisions. That means several new compliance, which include loan to value ratio fixed at 75%, purity certificates, ownership requirement, to get loans against gold. So these are the several factors which have been taken into consideration. DFS has also suggested RBI to exclude small ticket loans below rupees 2 lakh to ensure that the small borrowers are not affected. Along with that, the government has also suggested RBI to implement these new provisions from 1st Jan 2026, considering complex nature, ground reality, and the objective behind this exercise is to ensure that the small borrowers are not affected. Several such factors have been taken into account. In fact, this feedback and suggestions have been sent to the RBI, which is under consideration, and the government is expecting big relief for small borrowers.
All right, thank you so much, Prakash, for getting us all those details. So protecting the interest of the small borrowers indeed does mean that it could give boost to the industry as well. And taking cues from that, take a look at Muthoot Finance, Manappuram. They have all burst up anywhere between 3 to 7%. But with this, viewers, it's now time to slip into a very short break. Don't go anywhere. We'll be right back with more on the other side.
Back with closing trades right here on ET now, just mapping what the markets are looking like, and it's relatively quiet and ranged. That's how we've been for the better part of this week. Right now also just about 50 odd points lower for the Nifty. Having said that, sectorally lots is under pressure. Metals, chemicals, oil and gas, some of the power names. Autos have been taking a hit, dragged lower by Bajaj Auto, which has been reacting to its numbers. Other than that, it's some heavies like an HDFC Bank, SBI, L&T, which are providing some amount of cushion to the indexes, and Infosys and Bajaj Finance are lying flat as we speak right now. But let's welcome on board Alok Agarwal as well and find out what he's making of the market right now. Alok, hi, good to have you on ET now. Just wondering what sort of cues the market is going to work with in June, because pretty much all the good news seems to be priced in for now.
Yeah, hi, good afternoon. Pretty much so, but yeah, a lot of things have changed. We had a kind of a major correction in the first 2 months of this calendar year, and a smart recovery in the last 3 months, despite some of the negative news, both globally and locally. But very interestingly, over the last 6 to 9 months, a lot of macro data have started turning positive, with growth visibility improving, and corporate earnings also, the numbers are slightly ahead of estimates. So in all, certain things are improving, making the risk reward a little more attractive.
Right. Hi, Alok. Good afternoon. This is Shrishti. But help us with the sense that from here on, where do you see the markets headed, given your somewhat bullish stance on the markets, like some of the good pointers that you have been highlighting, and which sectors will actually participate in the anticipated rally, if at all?
The good part is, as we mentioned, a lot of the macro data have started improving first because towards the second half of last calendar year, a lot of macro growth numbers started showing, indicators started showing that there was a growth slowdown. But now, especially like the GST collection numbers being highest since November 23 in terms of year-on-year growth, the CPI inflation being at a multi-year low, the bond yields at a multi-year low, and very importantly, the way smartly the RBI has handled the liquidity portion from a negative 3 trillion at the beginning of this year to close to 2 trillion rupees positive. So a lot of things have gone positive. After muted quarters for last several quarters, now we have had double-digit earnings growth in Nifty 500 for this particular quarter, and with a broader market also participating nicely within that. So all in all, the numbers are looking attractive. Yes, in case the global volatility picks up and in case there is a trade of moving out of, say, some of the developed nations like US in favor of growing countries like India and China, so that could also lead to more fund flows coming India's way. That is an added benefit. But fundamentally, both macro and micro numbers are improving. Sector-wise, as you mentioned, the key sectors that are showing some growth and higher growth visibility, they include the likes of consumer discretionary. Within that, whether it is retail or some of the auto packs or select textiles as well. And in the healthcare, the hospitals are doing much, much better. And again, the select CDMO cramp players as well. Industrials is showing a lot of growth numbers and a good order book swelling as well, especially on the power and defense side. And lastly, on the financial side, the NBFCs look better placed, and the capital market plays right from exchanges to the wealth managers to the asset managers. They are showing some decent growth. So these are the areas where the growth numbers are coming up nicely. The visibility is improving, and that's where the focus area is.
In fact, we were just mapping NSE's valuation in the unlisted world, and it's jumped up nearly 45% alone in the month of May itself. But Alok, within the entire capital market space, where is it that you think there is still valuation comfort? Because it's really about the price that you want to pay for some of these names, right?
So the intriguing part about India is that something that's good quality and good growth visibility, it doesn't come cheap. So that's what the key dilemma for most of us as investors and fund managers is, that where you get the nice things, but they are never coming at a very, very reasonable prices. So one needs to see those names where the structural growth is better, not just the near term, and who has the right to win and is gaining market share. So those are the areas that are likely to sustain any kind of volatility as well and keep delivering on the earnings side. But the point well taken that rarely it's rare thing to find something which is value and good growth and good quality. So that combination is tough to find.
But Alok, nobody is really talking about the PSU pack. Yes, post-COVID, we have seen a lot of these PSU counters delivering great set of returns. But help us understand any pocket that is looking good to you right now within the PSU pack. Maybe it's banking or some other sector.
So let's dissect the PSU side more on the businesses front rather than the ownership front. So as you rightly pointed out, see, within the banking space, the combination of growth and quality is much better available in the larger private banks and some of the select large NBFCs. So that's where the view on those select large private banks and large NBFCs is much more positive as compared to the PSU banks. But when it comes to the other sectors, especially like the defense or to an extent some railways, these are dominated by the PSUs. So they are the ones who have the bulk of the orders and the execution and the lion's share of the profit pool of that sector. That's where in those sectors, the natural choice would be to have more of PSUs rather than the private sector. Eventually, as time passes by, there could be more and more private players, good private players who would come up the curve, that's where the exposure to those companies will go up. But instead of the ownership, it's better to see where the sector is dominated, who is having how much share of the profit pool, and where the growth visibility is much better.
Let's in fact pick up on that point. It's PSBs which are really the flavor of the day today. Look at SBI, that's seeing a sharp surge. It's more than 2% off the lows. The entire banking pack, 3.5% uptake. BOB is higher by 3%. Canara Bank is sitting with very hefty gains for itself. And the Union Bank, which is also scaling higher than about almost 4% or so. Alok, for the longest time, everyone's been bullish on banks, and now that strength seems to be trickling into the PSBs as well in particular. Do you think it's time that they will play catch-up now and one perhaps can increase weight there?
Yeah, the risk reward seems attractive out there. But again, if I look at the banks, the key numbers that I would track, they include the credit growth, the deposit growth, the potential for margin expansion, and lastly, the credit cost. All these four numbers are found to be little lagging as of now. I would really await some deposit growth to pick up, which would enable the banks to have a higher credit growth. The environment is pretty okay for the credit cost side, but as the thing goes, we are in a cycle which is likely to see a rate cut rather than a rate hike, and a falling rate cycle is more favorable to the NBFCs as compared to the banks. So my pecking order in terms of the lenders would be first the select NBFCs, followed by the select good quality large private banks, and then the PSU banks. It is possible that all three of them deliver, but the hierarchy of choice would be in this order.
All right, so that's the take coming in on some of these PSU counters, and especially the banking counters. But Alok, soon we will see the deadline for the tariff also getting over. Yes, of course, the nations are gathering the pace to go ahead and make some negotiations there. But amidst this, we have seen all these export-related sectors getting hammered, and along with that, some of these domestic sectors were getting interest. Once this dust settles in, Alok, do you believe that there stands a chance wherein some of the export-related plays can once again get back into flavor? Any sector that you wish to highlight, or what's your take? How will the markets react to any negotiations, especially the Indian markets?
So, as you pointed out, the export-oriented sectors, especially the ones which have exposure to the US, the large part actually includes from the IT and the pharma side. And especially on the IT side, it is not just, there's no rule as such which is affecting them directly. But in case there's any slowdown or any kind of spending curbs on the US companies, that would affect the overall growth numbers of the IT companies. And more importantly, how the AI thing is going to play out for them in terms of margins is something that we need to really watch out. There have been voices on both sides. But yes, in terms of the overall earnings growth projections, visibility vis-a-vis the valuations, the risk reward doesn't look too attractive, at least for the larger names. There are select mid-cap names which are in some niche areas which are growing at a good pace. They could still deliver much better numbers. Similarly, on the pharma side, we have been hearing so many noises around sometimes on the price side, sometimes on the curbs on certain allocations. It's better to, when the visibility is not there as much, I wouldn't want to really venture out and take a hard guess and venture overweight. This is at a time when some of the domestic companies on the healthcare side, especially the hospitals, are doing so well. A good amount of operating leverage is likely to play out for them with their hospital bed capacities rising, and they're doing pretty well on the operating efficiency side as well. So the export-oriented names, in short, IT and the export-oriented pharma, I would be a little underweight at these times.
Right, okay, that's the texture and flavor of what's happening in the markets right now. We've got Arpit as well joining in to talk about what he's making of the charts right now. Arpit, hi, afternoon. What's been your sense? It's been quite a range day, but where do you think we're headed next?
Very good afternoon to all. So first talk about the Nifty and Bank Nifty. So this series relatively Nifty has been trading in a very narrow range from last almost 10 to 15 sessions. But if you look at the weekly chart, it is consolidating between 24,650 to 25,050. So overall, but the good part is that as soon as we see some dip towards the lower levels, we see recovery from the lower levels. At the same time, 25,050 is the hurdle zone. So overall, our stance would be positive till Nifty holds above 24,650 levels. But at the same time, 25,050, 25,200 would be the hurdle levels. We're talking about Bank Nifty. So Bank Nifty, the entire May series has been consolidating between 1,500 points range, whereas on the weekly scale, 55,000 is the immediate major support. And today also we have seen good momentum in PSU Bank, which is helping the Bank Nifty. So relatively as compared to Nifty to Bank Nifty is relatively likely to outperform. And I think a closing above 55,555 Bank Nifty can see move towards 56,250, 56,500 levels. So overall, a bias would be slightly positive on Bank Nifty as compared to Nifty.
Okay, well, India is one of the most competitive markets. That's the word coming in from none other than the Interglobe Aviation CEO, Peter Elbers. He also sees massive opportunity in India with very ambitious travelers now.
India has been on a gradual trajectory of further internationalization and further growth. And, you know, we feel as the nation is spreading its wings, it's also Indigo spreading its wings. I mean, if you can operate in what I consider as the world's most competitive market, being India, I think we have a good starting point to start moving international. If home has an incredible, ambitious traveling public, I think the opportunity really is out there to build on that international network and international opportunities. And 65% of the world population is living within a 5 to 6 hour range from India itself. So the opportunity that provides for us is really the driver, not whether we have a bit more or a bit less market share. The opportunity which is out there, and I think Indigo is very well placed to make use and actually to reap the fruits of that opportunity. Indigo is very well placed here. Indigo has the world's largest order book, and we have over 900 aircraft on order. With that large order book, we are in the position to get one new plane each and every week coming into our fleet. Overall, globally, we see actually an improvement in the supply chain, and with that, a reduction for us in terms of number of planes on the ground. And with that, we're very confident that we can continue our growth trajectory going forward.
Right. Alok, wanted to get your opinion in. I mean, of course, you know, within the entire aviation space, there is only one choice, and that continues to be Interglobe Aviation. But if one has to really broaden one's horizon, look at the entire tourism and hospitality industry, what's the best way to play that? Is it going to be via some of the aggregators, still very small in terms of market cap? Is it going to be via hotels? Or would you say aviation gets the benefit of it all?
So I think the better one would be the places where there are choices for operating efficiency and some degree of pricing power. So that is actually coming in the aviation side and some of the hotels as well. So some of the large ones as well as the mid ones as well. But on the aggregators side, I'd see some kind of margin squeeze happening there. So I would really prefer the aviation side and the hotel side to play the tourism side. And the growth numbers are pretty good. So the view is positive on the tourism side.
Okay. Alok, so good having you on the show. We'll let you go on that note. Good speaking with you as always.
Sure.
Just looking at some of the buzzers then in trade, and it continues to be buoyant for a BSE, NBCC, Union Bank. They're all seeing some very, very big reactions. But we've got Sunny Agarwal as well joining in on the show. Sunny, hi, afternoon. What is it that you're making of the market right now? Ripe in valuations, or there are still pockets where you think one can invest?
Yeah, good afternoon. I think market will continue to remain stock specific, as we have seen many mid and small size company reporting a very good set of earning. At the same time, growth outlook continue to remain robust for the next 4 to 6 quarter. So rather than getting obsessed with an index level, I think stock specific activity is something which is likely to continue at least in short to medium term. That's our view. On the top of that, with an upcoming RBI policy, I think rate sensitive may continue to remain under focus. So the entire auto, especially two-wheeler pack, real estate and banking, within banking PSU pack, where the bond portfolio holding is significantly high compared to the private pack. So there we are expecting some, still there is a potential of upside in this pack in the short to medium term.
Right, okay, that's the take coming in on the markets right now. Just looking at some of the laggards then today, and you can't take your eyes off from Bajaj Auto and the kind of, brokerage reactions that you had post the numbers. Of course, you're on the anvil of the monthly sales data as well when it comes to Motown. In fact, Shrishti, walk us through how the brokerage reactions have been on Bajaj Auto, and then, of course, what is it that we anticipate in terms of the monthly sales?
Well, yes, firstly, on to the brokerage outlook for Bajaj Auto, there has been a downgrade coming in post the earnings because they believe that very much was already in the price given the fact that it was an inline set by the company. But going ahead, the KTM restructuring that the company is undertaking, that could be one of the biggest challenge as per DAM Capital, where they have gone ahead and downgraded the rating on Bajaj Auto from a buy to a sell now and have slashed the target price to 7,650 odd rupees. And they're also not finding the valuations quite favorable at this point in time. Along with that, Nuvama has also come out with a note. They haven't changed their target price for Bajaj Auto, retaining their buy with a target price of 10,700 rupees. So that's the brokerage verdict on Bajaj Auto. Very much seems to be in the price, and hence a 3% cut is what we are seeing. But especially when it comes to the auto sales data, all eyes on that. And this time, firstly, from two-wheeler pack, the numbers are expected to be really good. It's a double-digit growth that we are anticipating, given the fact that marriage season will help the numbers. Along with that, the rural demand is also perking up, and double-digit growth is what we are expecting for Bajaj Auto, Hero MotoCorp, as well as Eicher Motors. And especially for Hero MotoCorp, look out for that, because April month was kind of a washout quarter for Hero MotoCorp. So on a month-on-month basis, the company can actually post a 66% jump. Don't go by the number, but definitely that can do well for Hero MotoCorp. Other than that, from the passenger vehicle space, not much expectations, because in order to push the sales, some companies are actually giving discounts, and that's hampering the growth in the urban market specifically, and a bit of a decline is what we are expecting from all the passenger vehicle companies. Similar is the case with commercial vehicle segment as well. Not many hopes lying there. But lastly, from the tractor division, good set of commentary is expected. The farmer sentiment on ground is holding up very well, and that could give boost to the numbers as well. Escorts and M&M both are expected to show great set of numbers. So that's the kind of numbers that we are working with when it comes to the auto sales data. But Kunal, specifically, I wanted to have your take on Hero MotoCorp, because that's I think that company will remain in focus, given the fact that they had an investor day back in the month of May. The company did delay it. So I think that the market is still working with or looking forward to what the actual announcement could be. The suspense is there. But what's your sense on the stock price? Break it down for us.
No, I think it's still a better chart than Bajaj Auto if I have to compare it, like to like for this two-wheeler major. But I think in terms of the chart specifically for Hero MotoCorp, what we have seen is that there's been slight higher jump in volumes for the stock, and from the move from 3750 levels to 4500ish thereabout was on the back of volumes which was almost like 1.5 to 2x of the volumes prior to 10 days of the prior consolidation, the price correction for Hero MotoCorp. And then post that we've seen the stock consolidating. So it's a much more decent chart as compared to Bajaj Auto, less volatile, more strong in terms of volumes. But I think in this kind of a scenario, and especially given the market texture, it is always better to wait out for that confirmation of a breakout for the stock, or else buy the stock when it dips back into that strong support territory over the near term. That level for Hero MotoCorp would be closer to 4,150.
That, of course, is the take coming in right now on what's really happening across the two-wheeler segment. But Sunny, what is your own take, especially on Bajaj Auto? Pricing pressure clearly is visible for both the domestic as well as the export markets, which I guess explains the reason why they had to cut prices by 4 to 5% in the Africa geography. Having said that, the product pipeline is strong. That includes the electric two-wheelers, entry-level 125cc bikes, e-rickshaws, and of course the new two-wheelers as well.
Yeah, so I think Bajaj Auto again a kind of a mixed bag set of numbers. So on one hand, domestic volumes are under pressure. On the other hand, export continue to do well. As you rightly pointed out, even on electric portfolio side, Bajaj has been consistently gaining market share on EV side. But the recent commentary by management regarding the overhang on supply of magnets, that is one of the key components for EV portfolio that can hamper volume in short term. To that extent, we believe that maybe FY26, at least during the first half, we may see kind of a muted growth on earning front as far as Bajaj Auto is concerned. On a valuation front, we believe that at current juncture, Hero MotoCorp look slightly better place where risk reward is favorable, trading close to 19 times price to earning multiple. Again, but Hero MotoCorp is also struggling in terms of volume growth. But looking at a valuation and the kind of free cash flow yield at which the company is trading at, we believe the risk reward is more favorable on Hero MotoCorp side. And at the same time, we would like to ride this entire sector through auto ancillary space, wherein many auto ancillary companies are likely to report a better earning growth compared to their OEM. For case in point, Lumax, both the Lumax, whether Lumax Industry and Lumax Auto, both the companies have reported good set of number, and we believe that the momentum will continue going forward. SGS Enterprises, Gabriel India, which is again one of the leading shock absorber provider to the two-wheeler industry. So I think auto ancillaries are relatively better place as compared to auto EM at current juncture.
All right, so that's the take on the legacy players. Sunny, but help us with your take on Ola as well. But before we come to your take on the same, let us just revisit what the company, or rather what the stock price has done so far since the listing, because definitely it's down almost 66% from its all-time high levels, close to near that 150 odd mark just post the listing that the stock has witnessed. And from the listing price as well, when we see that the stock is down more than 30%, and that's of course being supported by a very dismal set of earnings, because the losses are once again on the books, and they seem to be increasing quarter by quarter. It's the fourth straight quarter where the losses have widened for Ola Electric, and it's over 800 crores of loss that the company has reported. Not just that, we all are aware that how the market share has been on the declining trend, because at one point in time the company used to be the leader when it comes to the electric two-wheeler space, but now look at the numbers. It's not just half from those levels, but 20% is what the company is holding. We are aware of the reasons, the kind of service issue that the company has been having. Other than that, some of the new launches, they did not garner that kind of a support that was anticipated, and the response there. So all these numbers have been not boding well for the stock price, of course, and still the heightened promise continues, because on the revenue front, the company is expecting that it will catch up, and a better number is expected in Q1. The deliveries are expected to be close to 65,000, and the gross margins, while the company has promised gross margin improvement back in Q3 as well, they failed to deliver that, and now in Q1 they are expecting that from now 19.2 levels, 28 to 30% is what the company is working with. So all in all, definitely not a great set from Ola Electric. And Sunny, almost a 50 rupees is what we are seeing. What's your take on Ola Electric?
Yeah, I think a clear disappointment in terms of volume number and the way incumbent players are getting aggressive and gaining market share. I think this entire two-wheeler electric space is getting hyper competitive. With the recent listing of Ather Energy, I think even there is a pressure on Ather to deliver a profitable growth. So I think as discussed during the IPO time, that till the time you are not, the company is unable to integrate its own battery pack, that will aid in at least 2 to 3% incremental margin. But ultimately, it is a volume number which matters in any auto ancillary company, any auto EM company. And the way volumes are dwindling for Ola, I think we would like to avoid at a current juncture.
Okay, that's the take coming in on what one has seen from Ola. But let's also take it across to Varun and find out more about Apollo Hospitals.
Well, so we are expecting good set of numbers from Apollo Hospitals, wherein the overall Revenues are expected to go up by around 14%, and also the EBITDA is expected to go up by around 22.5%. The margins are expected to increase from 13% to around 14%, and the profitability that would increase by around 47.4% to 374 crores. Now, the overall beat on numbers would be actually because of the case mix and also because of growing volumes, especially on the hospital segment, which have actually delivered good results in the past as well. Also, the occupancy rates and the ARPOB are expected to increase this quarter as well. Although, if you look at the international business, that has been impacted because of the Bangladesh issues, and let's see how the international business performs this quarter. Other than that, the AHLL business that is expected to do good, and the GMV for the Apollo 24/7 is expected to show a decent increase. Also keep an eye on the overall insurance business because the company was supposed to do some tie-ups with some of the companies for this quarter, and some of the good revenues were expected from the insurance business in this quarter, which would aid the overall profitability of the company. So we are expecting good set of results from Apollo Hospital, especially driven by the hospital segment and also contribution coming from the insurance segment.
All right, thank you so much, Varun, for getting us all those details. So let's watch out for Apollo Hospitals. But moving on, in the latest edition of NSE Market Pulse, the exchange has noted that the promoter ownership fell for the third straight quarter in March 2025 to a 7-quarter low, but the domestic mutual funds continue to infuse capital. We will definitely get more details on this one. That's some interesting data right there, how the ownership has changed hands and how the domestic funds continue to support. And well, of course, we have been highlighting the fact that month-on-month basis, the SIP inflows continue to be quite robust, and that's quite visible on the domestic funds as well. But before we get to our colleague Anjali, let me just quickly have a take on Apollo Hospitals as well. Arpit, give us some sense that how is the chart looking like for Apollo Hospitals, because this counter too gets very volatile post the earnings, though this time it's a decent set that is expected, but what's the setup?
So looking at the overall the hospital space, if we see the chart structure of Apollo from last almost couple of months, it has been stuck in a range between 6,800 to 7,100. And if I look at the bigger time structure, so 7,100 is a major supply zone for the counter. But at the same time, on the daily chart, it is near its 50 DEMA, that is near its support zone. So looking at the chart specific wise, since it's at a support zone, I think from here on, more or less the counter would be sideways to positive, with immediate 6,800 would be the major support zone. Until the counter holds above 6,800, a bias would be slightly positive. Immediately, the chart is on the downtrend, but overall setup wise, a range bound to consolidative we're expecting for next couple of days.
In fact, Anjali is back with us, so let's get in the latest edition of NSE Market Pulse.
That's right. NSE has come out with its monthly market pulse, and this time the focus is on looking at the ownership patterns and how they've changed in the financial year 2025 when it comes to India Inc. So now promoter ownership in Indian stock markets continues to shrink. That's the biggest trend coming up. In the March 2025 quarter, the promoter holding in all NSE listed companies fell for the third straight time, and it dropped 28 basis points and is now at a 7-quarter low of 50.1%. This was sharper in the Nifty 50, where the promoter share declined by 57 basis points, and now it is at 40.6%, and this is the lowest level in over 2 decades as far as Nifty 50 is concerned. Now, government stake, which has risen over the past 2 years thanks to LIC's listing and PSU outperformance, that also fell to 9.9%, and this is the lowest in 6 quarters now. Foreign portfolio investors showed a slight return of confidence after a year of largely volatile flows. Their overall share in Nifty listed firms rose to 17.5%. Now, this was driven by a renewed interest in private banks. Now, when we talk about domestic mutual funds, they continued the steady climb, of course, thanks to strong SIP inflows, which was up 45% year on year. The domestic mutual funds share rose to an all-time high of 10.4% across NSE listed companies, and for the first time ever, mutual funds now hold a bigger share of the market than individual investors. So those are the latest trends in terms of ownership in India Inc. that the NSE's Market Pulse for the month of May has come out with.
All right, thank you so much, Anjali, for getting us all those details. So indeed, quite an interesting data there. And back to the markets. Just a few minutes left for the markets to shut shop. Nifty Bank is still holding on to the shade of green, but while Nifty 50 is up below that 24,800 mark. But a lot of these chemical counters are boring well. And Arpit, if I can quickly have your take on Rallis India, because day by day we do see some of the chemical or fertilizer company having a good day, but a 12% jump, what do you make out of it? Because the earnings did come out, I think, almost a month back, but the stock is reacting positively and it's been a good journey so far.
So the entire space has seen a very decent rally. And if you talk about rallies India as a whole, weekly chart, a classical range breakout. On the daily scale, it has given a consolidation breakout with good surge in volume. The stock is already up by 12%, but definitely it has more room towards hitting towards 335, 340 levels. So on the chart setup wise, on the weekly wise, definitely the stock can head towards 340 levels. That would be the immediate target for the counter. On the downside, 310 would be the immediate support zone.
Okay, those are some of the interesting ideas over there. Eternal, of course, is the one which is holding up very smartly. The PSB banks, they continue to hold up and they continue to look good. Led, of course, by SBI, Union Bank. These are all extremely buoyant names in trade. And then BSE has now surged up over 8% as we speak right now. Muthoot Finance scaling up even further. And NBCC as well has been looking very good. Kunal, any of these infra plays, starting off with L&T, NCC, NBCC, what's looking good for trade?
Yeah, I think L&T is one of the strongest name, of course, a more formidable stock. So that's something which looks attractive even at current levels. And my sense is that the stock should be good for at least another 80 to 100 points on the upside over the very short term. But the surprise mover over here could be NBCC. I've been tracking the stock over the last couple of months, and especially from the point when the stock has come back sub 100 levels towards 120 plus where the stock is trading right now. I think it's been an excellent move for NBCC. The long-term charts are quite positive, and it looks like that phase from for many of the PSU names, which was in second half of 2024 till first couple of months of 2025, where these stocks fell by more than 30% to 50%. Some of them, I think that phase is now behind, or the major part of the mean reversion is behind for many of these PSU names. So bullish, or in fact extremely bullish on stocks like NBCC. Even from current levels, and for L&T expecting another 80 to 100 points on the upside.
Sunny, very quickly, within the infra pack, what's looking good to you?
Yeah, so within infra pack, obviously from a frontline company, obviously Larsen and Toubro is continue to remain our top pick. But within the mid-sized company, we believe NCC is sitting on a very robust order book. Although most of the infra companies have alluded that first half of FY26 can remain slow in terms of execution, but in terms of valuation, again NCC is looking very attractive. Another player, PowerMech, which has reported a very good set of numbers and sitting on a robust order book. So PowerMech is one company which we are constructive on.
So that's about some of the interesting ideas related to the infra space. But with this, let's also get you some of the other ideas from our experts, and let's get you the BTST or rather STBT ideas as well. Arpit, help us with your stock ideas.
So we have two ideas. One would be from the PSU pack, as PSU banks are witnessing good momentum. So first one would be Bank of India. So a classical range breakout on the daily and the weekly scale with good surge in volumes. Highest ever weekly close after 7 to 8 weeks. So this would be our first idea with keeping stop loss of 118 for an upside move towards 128. Second would be from the new age company, that is Paytm. So overall Paytm has been moving in a triangle, and today it has given a symmetrical triangle breakout on the daily and the weekly scale. So risk reward quite favorable, and we can say a good move towards 930. So this would be a second idea with keeping stop loss of 860 for an upside move towards 930.
Those are the two calls coming in from Arpit. But Kunal, what about you?
So two buy calls. The first one is one AB Capital, a stock which is start to look attractive. A bullish flag formation breakout on the daily charts. So would look out for 240 as the target. Stop loss at 215. And the second is one DCB Bank. And after quite some time, the stock has made a very strong comeback. Would look out for targets in the range of 155. Would recommend a stop loss of 143.
All right, so those are the buy calls coming in from Kunal. But Sunny, I'm not sure whether you will come out with the specific targets, but any theme that you believe can work well in the near term?
Yeah, so I think one company where we have recently come out with a result update is Good Luck India. Again, it's a small cap, a structural steel tube as well as a play on defense. So there, I will repeat the name Good Luck India. The price target there we have of 1200 rupees. So we believe that their defense plant is getting commercialized in the second quarter of FY26. So that will aid the earning growth, again trading at a very reasonable valuation. So Good Luck India is the one stock which we are preferring at a current juncture. One more stock which we like is LT Foods, which is also known as Dawat, again a branded rice player, having presence in India as well as US through Royal brand. So there we have seen a kind of a bottoming out in terms of basmati paddy prices. So since the stability will return to the rice as well as paddy prices, we are expecting a decent growth over there. So Dawat Food is another stock which we are recommending from short to medium term perspective.
Okay, that's the take coming in on some of those preferred ideas. Just winding down for the week, and for the week, we've actually lost 1% at the Nifty level. Couldn't quite sustain onto that, 25,000 plus odd levels, or even for that matter, 25,000. The mid caps and the small caps have done relatively better, or a lot better actually. About almost a 1% uptick coming in for the Nifty Mid-Cap 100 index, and the Nifty Small-Cap 100 has also managed to put on gain of about almost 1.25% or so. The big winners have been PSU banks all the way. The index has surged almost 4%. Then, of course, you've got Nifty Realty as well, which saw some decent moves in the week gone by, almost a 2% surge for the Nifty Realty index as well. But for more details, I'm going to hand it over to Snehi for the closing trades.
Absolutely. Let's take a look at how today's as well as this week's trading session has panned out, and let's pull up what the Nifty has done in today's trading session. Remember, yesterday we closed very comfortably above that 24,800 mark. Today that has been a struggle because we're even struggling to hold on to that 24,750 mark on the Nifty today. So that's how today's trading session has panned out. A 0.4% cut coming in on Nifty, 0.3% cut coming in on the sensex as well. It's the banking and financials pack that has done very well in today's trading session, because you have Nifty Bank up almost 0.3%. That's outperforming the entire market, along with Nifty PSU Banks, which is the top sectoral gainer. Remember, yesterday Nifty PSU Bank was the top sectoral loser, and today it has completely flipped that, and it's the top sectoral gainer today, along with Nifty Financial Services and Nifty Bank. So it's the entire banking and financial stocks that have done very well in today's trading session, because other than that, the entire market is lackluster. But before we talk about sectoral gainers and losers, let's talk about some Nifty gainers and losers today. Eternal erstwhile Zomato, very good moves coming in, up 4.5%, followed by SBI, HDFC Bank, L&T and Bajaj Finserv from the Nifty gaining end. On the losing end, you have Bajaj Auto, 3% cut coming in, inline set of numbers, but you had 6 brokerage downgrades coming in on Bajaj Auto, along with one that has maintained their sell, that's Kotak Institutional, maintained their sell. So bearish brokerage notes coming in, and despite inline set of numbers coming in, a 3% cut coming in on Nifty Major Bajaj Auto. Followed by that, you have cuts coming in on Hindalco, Shriram Finance, HCL Tech, NTPC, ONGC and Tech Mahindra. So if you take a look at the sectoral gainers and losers today, like I mentioned, Nifty PSU Bank, Nifty Bank, Nifty Media has tilted its way to the green right now, so that's looking good. But barring these, all of these sectors are in the red. The other ones like Nifty Metal, the biggest loser today, almost a 2% cut coming in, followed by Nifty IT, Auto, Realty, Pharma, FMCG and Energy. So that's what the market breadth has been like today. And while we are talking about the market breadth, let's take a look at what the broader end of the market has done in today's trading session, because you had some show of support coming in from the Nifty mid-cap and small-cap space. However, they have also tilted once again in the red. Nifty mid-cap down 0.2% and Nifty small-cap also down 0.1%. So absolutely no pockets of green coming in except the banking and financial space in today's market. The advanced decline ratio, 1100 stocks in the green, more than 1500 in the red. So it's been skewed towards the declines ever since the get-go. And on the back of that, let's take a look at what the India VIX has done in today's trading session, because another cool off is what we've seen. Remember, yesterday 8 or 9% cool off we had seen on the India VIX. Today another 2% cool off, and now we're close to that 16.1 mark when it comes to the India VIX. Other than that, some other stocks that were in focus today, Amara Raja, weak set of numbers coming in. That stock has a nosedive today. Same story for Ola Electric, continues losses, pushed its guidance, and Ola Electric is also a stock that has not done very well in today's trading session. A 5.5% cut coming in on both of those counters. Other than that, let's talk about some other stocks, the likes of Alchem Laboratories. This stock was also under some pressure in today's trading session. You have Birlasoft, Adani Group, Prestige Estates. Prestige also another stock to talk about. Weak set of earnings at what it has reported, but brokerage notes are upbeat. But that is how we are summing up for the trading day as well as the week. Looks like we have not held on to the 24,750 mark. We'll give the rate some time to settle, but this is what it's looking like for this Friday's closing bell.